so this is a question on company accounts. So the question goes as, the following travel allowance was extracted from the books of Johnson Nigerian Limited as at 31st of December 1990. So we're giving a travel allowance to be this. And don't forget that on our travel allowance, first of all, travel allowance is the book that contains the list of all our ledger accounts arranged in the debits and credits, and usually it is used to test the arithmetic accuracy of our accounts. And you know that travel allowance has to be, our travel allowance has to be balanced. That is, if your debit is not equal to your credit, that means there's an error somewhere. So the first check you have to confirm is it balanced. That is, does your debit equals to your credit? And if you look at this, you will notice that it is fine. Alright, so, and then don't forget that on your travel allowance, you have, on the debit side, you have your asset, purchase and expense on the debit side, and on your credit side, you have your sales, income and liabilities on the credit side. Now let's check this question together. Alright, so okay, so this question has an additional information section. Okay, we have, I think we have 11 additional informations that accompany this question, and we are asked to prepare the trading profit and loss and appropriation account for the year ended 31st December 1990 and a balance sheet as at that date. Now you have to take note of some key points. Now let's start the solution. Now the first thing you have to start with, or the first thing that it's advised to start with, is to start with your workings, that is your preliminary workings. Now you have to take note of this point, which says treat all additional information twice. Now for every additional information that you'll be given, you're expected to treat them twice. Please take note of that. Alright, so let's take the first additional information. The first information says stock at close is 12,500, and we are supposed to treat it twice. Now the two times you'll be posting this, or you'll be treating this stock at close, is number one, you'll be posting it as your closing stock. You'll be using it as your closing stock. Don't forget that closing stock represents the amount of goods that you have in your business at the end of the day, and closing stock usually is given to us as an additional information. The stock that you have in your travel balance represents your opening stock, so your closing stock is given to you as an additional information. That's additional information one. And the second part is you'll be treating it as your current asset on your balance sheet. Alright, so that's additional information one. And additional information two, expense unpaid, which is, expense unpaid can be referred to as your expense accrued or outstanding expenses. What expense accrued means is you have enjoyed something and you have not paid for them. Take for instance a very good example of expense unpaid or expense accrued are, take for instance a number of us that we are using lights, that we are not using the prepaid meter this time around, like we are using light and we are paying, and they will give us bill. They will give us the bill for our lights. So the bill they are giving us is for the lights we had used for the previous or for the last month. Don't forget. So for those kind of expenses, for those kind of bill, they are giving us bill for last month. So those expenses are said to be expense accrued or outstanding expense. That is expenses that we have enjoyed and we have not yet paid for them. I hope I'm making sense. And the way to treat that expense accrued or expense unpaid is usually you have to add, because on your profit or loss account you have to show all the entries, all the things you've done, all the operations for the year in your profit and loss account. So usually what you would do is you would add it to your profit and loss account, you will add expense unpaid or any expense accrued or any outstanding expense, add it to the amount you have on your travel balance. Then that's the first part. Don't forget we said treat it twice. So the first part, and the second part is you will have to go and take that expense unpaid, you have to take it to your liability, because you are owing NEPA, you have not paid them. You have enjoyed light and you have not paid, so it is owings, and your owings are called liability. So it's a current liability because they are the kind of liabilities that you don't expect to pay for a period that is above 1 year. So of course you want to pay within 1 year, so it's current liability. So now the first expense unpaid that we are giving here is our motor expense of 200 naira. if you check my trial balance, you will see that this motor expense has 1.8 motor expense. If you check trial balance of motor expense, you can see the second item, motor vehicle expense, is 1.8, and we've been given as an additional information, we've been given the motor expense unpaid to be 200 naira. So you have not paid 200 naira and you have paid 1.8. So automatically what is going to your profit or loss is the part you have paid and the part that you are still owing that you have not paid, which is 200. So 1.8 plus 200 would give you 2,000. So it is 2,000 naira that you'll be posting into your profit or loss account. And on your balance sheet, you have to recognize the part, the only part that you recognize in your balance sheet is the part that you have not paid, so that you know that okay, there are some set of people I have not paid. Do you understand? Even though you have recognized 2,000 on your P&L, which is the total expense that you have incurred, you have to recognize the part that you have not paid in your balance sheet. So I'm moving to the next, which is insurance. So the same thing we are doing for insurance. Now if you notice that insurance we did not pay for insurance at all during that period, so that is the reason why you can't see any figure here. And I've helped you with this color. Anywhere you are seeing blue color, you have to know that those entries you are posting them in your balance sheet, and wherever you are seeing your red ink signifies that you are posting them on your P or L. So now insurance, you did not pay anything for insurance, so and you are still owing them 450. So that 450 that you are still owing them, you have to go and show this on your profit or loss. That is, I have incurred 450 on insurance that I have to pay. I hold them. So you have to show them 450. You have to show it on your profit or loss, and 452 you have to go to your current liability, that is the part you are owing. So those are the two entries that you are passing. For the sundry expense, the same thing. We have 400 as our accrued. On our TB we have 35. Now 35 plus 400 we have 39. So 39 has to go to your P or L, then 400 has to go to your balance sheet. So I'm moving. So 39 has to go to our P or L, just as I have explained. But mind you, I think there is another additional information that relates with this 39. So let me move to C. Now for C we have rates 320. Rates prepaid. Now when we're talking about prepaid expense are the kind of expense that you have not enjoyed but you have paid for them. Take for instance, I've paid for hostel facilities in my school for 2020, 2021 till 2022, and because of this corona issue, because of all of these situations around, I noticed that I will not be able to use those or use the facilities I have paid for. I'll not be able to use the hostels I have paid for. You will agree with me that you can go back and claim your money because you are not using or you are not enjoying that thing again. So likewise for prepaid expense, what we are saying prepaid expense, we are saying those are the expenses that you have not enjoyed them. You have not enjoyed them at all, and you have paid for them, like you are paying in advance. So it could be payments in advance, it could be prepayment. So either of the two, they can call it either prepayment or they could call it payment in advance. So payment in advance, the way it works is because you have not enjoyed that thing, despite the fact that you have paid, you have to take it out from your P or L. Take it out from your P or L, number one. That's the first entry. That is deducted from your P or L, deducted from the amount you have on your trial balance. That's first entry. Now the second entry is you have to go and show it as an asset. Is an asset to you, like it's a property. That is, if you decide to say, okay, you're no longer using that facility, you're no longer using that hostel, or okay, I'm changing my school, I'm no longer using the hostel, you can still claim your money. Do you understand what I'm saying? So that's prepaid expense. So for prepaid expense, the two legs or the two entries to be passed are: number one, take it out from the amount on your T bill from your P or L, then you have to show it as an asset, current asset on your balance sheet. So 320, by the time I'm taking 320 from my 16, I will arrive at 1,280. So 1,280 is the amount I'm putting to my P or L, then 320 to my balance sheet. Now the second entry, which is my sundry expense of I prepaid 250. Now if you notice the sundry expense, you notice that from additional information B, which is B3, I have 39 here, so I have a 39, and they said I have a prepaid expense of 250. So 39, I'm bringing that 250. That is why you can see the arrow down, which is A, calling out to this part. Okay, and this part is telling you that this 39 is coming from this portion, which is additional information B3. So 39 minus, because the nature of prepaid expense is to deduct it from the amount on the trial balance. So 250 minus 39 would give us 3,650. So 3,050 is now the amount I'm posting to my P or L, then 250 to my current asset on my balance sheet. I'm moving to the next part, which is provision for bad debt is to be increased to 2,800. Now you know that provision for bad debt is usually the amount set aside from profit, to cater for bad debt. And usually I need to explain what provision for bad debt means before you will be able to understand how to practice them. When we talk about bad debts are irrecoverable debts. That is the debt that you have zeroed your mind that, oh, I can't recover this debt again. Take for instance, you have someone that is owing you some amount of money, maybe 2 million naira, and you got in the news that the person you got in the news that where the person is working, they found out that people that contacted coronavirus are in the company, and they have quarantined virtually all of them. And you notice that a number of people fall sick, and probably some set of people died due to the virus in that same company, even though they've not announced. So usually as an accountant, if you look at the accounting concept of conservatism or prudence, saying that you should be able to play safe. And what you are saying is you have someone that is owing you, and you are hearing information that people have, some set of people have died in that company. Of course, they've not announced the name of the people that probably died. So usually what you're supposed to do is to be on the safer side. Regard that debt as a bad debt, because the chances of recovering that debt is very, very slim. So you have to classify that as a bad debt. Now when we talk about bad debt, I've said that bad debt is irrecoverable debt, and in accounting we used to make provision for that bad debt. Now when we say provision for bad debt, what it implies is that you are saving some set of money from your profits. You set some money aside, you remove them, now you go and keep it somewhere. Now the reason why you're keeping it is for this for the case whereby you will be having bad debts. That is, whenever bad debts occurs, bad debts they would affect the business, and if you're not careful, debts can kill your business. For the most times, if you can't recover them again, if you're not careful, it kills your business. And because the effect that bad debts could have on your business, you have set aside some amount of money that in case this thing happens, so that it will not affect you beyond what you have planned for. So you have to keep you have to set some money aside. And when you are setting those money aside, because don't forget that you are taking that money from your profit. So as far as you are taking it from your profit, it is treated as an expense in the business. So whenever you are putting money as provision for bad debt, it is seen as an expense in the business. Now let's take for instance, after like 14 days after the quarantine period, don't forget I told you that someone is owing you, and you realize in the news that they've quarantined some people in that company. After 14 days, they now announce in the news that they have released those set of people, and they told you that the person that was owing you is now free. And the person did not die eventually, and the person is free from coronavirus. You'll be happy that, oh, thank God, that means you receive or recover your debts. Now at that point in time, let's take for instance, because you have made provisions for bad debt before at the initial stage, but this time around they are getting a good news that you can recover your debts back. So in that case, you are reducing your provision for bad debt, because now you can recover your debt back, so there's no need to make provision again. So whenever you are reducing provision for bad debt, it is an income. Take for instance, I have set aside like 500,000 naira in my business, that in case this person did not pay me, so that the money will not affect me to that extent, let me keep this 5,000 naira somewhere. I kept the 5,000 naira somewhere. You now realize that the person can still pay you. So definitely there's no need to keep the money somewhere and the money will be laying idle. You have to take the money back to the business, Abi. So now taking the money back to the business is treated as an income. I believe I'm making sense. So there are two ways to it. Like when you are making provision for bad debt, it is treated as an expense, and when you are now reducing that provision, it is treated as an income. Now for this question, which is this additional information D, they say provision for bad debt is to be increased to 2,800. Now when you increase it, That is, you are taking from your profit, you are going to keep it somewhere. And when you are increasing, it is treated as an expense. Don't forget. Usually, before, formerly, it was the provision of value that was in the business on the TB, it was 2,000. So it was 2,000 that was on the TB. So the increase is an expense. So 2,008 minus 2,000 will give us 800. So this 800 is now the new amount of money that we have increased our provision for bad debt by. So this 800 will be posted to our P or L as an expense, and the 28 is the new amount that we are going to be recognizing as our provision for bad debt, which would be taken out, or which will be taken deducted from our debtors. So I'm moving to the next part, which is E. They said the part of the premises is sublet at 2,400 naira per annum. Now, if you notice this is an income, because you're giving out some part of. Take for instance, you have a very big compound, so you are giving a part of it that, okay, you will be using this thing and be paying me some money, and the person is paying 2,400 naira per annum. So it is an income to you, Abi. And mind you, that particular income is yet to be received, because it is not on your trial balance, and no, like, it was not stated anywhere in the question that they have received that income. So what you have to do is treat as an income first, treat as an income on your P or L, and you have to treat it as an asset. Treat as an income, and you have to treat it as an asset. That is, your income, your income accrued is an income. It is income accrued, and it is treated in your recognized in your P or L, and also in your balance sheet as your asset. I believe you could see the instruction here. Now I'm moving to the next part, which is F. Now, monthly salaries and wages bill 400 naira. Now, monthly salaries and wages is 400 naira. If you check monthly salaries and wages 400 naira, usually accounting entries or accounting transactions or final account are usually prepared in the period of 12 months, which is 1 year, and we have been told that the monthly salary is 400 naira. So definitely, when you are paying monthly salary of 400 naira by 12, because you have 12 months in a year, so 400 naira by 12 will give me 4,800. So normally what that one is telling me is I am supposed to pay monthly salaries and wages for 1 year of 4,800 naira. However, the amount on my TB is 5,000 naira. So what that implies is that I have paid more than what is expected of me to pay. Or okay, so what that implies is, okay, the amount I incur, or the amount I'm supposed to pay is 4,800, and I've paid 5,000. So automatically what that means is I have paid more, and what that implies is I have paid in advance, which is prepayment. So I've paid 200 naira in advance. So the 200 naira, and don't forget, the amount I have to recognize on my P or L is 4,800, which is the exact amount that I incurred in that year, and the 200, which is my prepayment, that I have to be recognized on my balance sheet. All right, I'm moving to the next part, which is bad debt as at 31st December 600. So bad debt 600, I have to deduct it as an expense, number one. Now, if you notice, we have whenever we talk about bad debt, there are two ways to it. If you're giving bad debt, in your trial balance, if you're giving it in your trial balance, you will not, the instruction is, please don't deduct it from your debtor, because it must have been deducted from your debtor. Why? Because it's on your trial balance. And two, if you're giving bad debt as an additional information, please deduct it as an expense and deduct from your debtor, because it has not been deducted from your debtor. That is why they are giving you as an additional information. And in this case, we are giving as an additional information. So bad debt as at 31st December is 600 naira. So deduct as an expense and from debtors. So those are the two entries. All right. So I'm moving to the next part. And now when we deduct 600 from my debtor is 12,390. My debtor is 12,390. Now if I deduct this, I will get 11,790. 11,790. And mind you, don't forget that I have made provision for 2,800. So by the time I take out my provision of 2,800 from my 11,790, I would arrive at 8,990. So 8,990 will now be the new position of my debtor that will be going to my balance sheet. the new position of my debtors that will be going to my balance sheet. All right, I'm moving to the next part, which is loan interest is 5% per annum. Loan interest is 5% per annum. If you check the question, if you check the trial balance, you will notice that I've received a loan of 24,000. And you know, loan is just like you're going to borrow money from a bank, probably. All right, so if you're getting from individuals, it is called debentures. All right, so loan interest of 5% per annum, you're supposed to pay 5% at the end of 1 year on this particular amount of money that you have borrowed. So 5% of 24,000 is 1,200 naira. Now, if you check the trial balance, you will notice that the loan interest that was posted in your trial balance is 1,000 naira. So automatically, what that one means is you have paid 1,000 naira. So if you take a 1,000 naira from 1,2, that means you have 200 naira that you are yet to pay, that you are owing. So this 200 naira has to be posted in your balance sheet as your current liability, and the amount you are posting in your profit or loss is your 1,2, because this is the amount of money that you have incurred that you are supposed to pay. All right, I'm moving to the next part, which is my I. Don't forget, this additional information runs to K. Now for I, provide for depreciation on a straight line method. And don't forget, depreciation is the gradual fall in the value of an asset. It's the gradual fall in the value of an asset, and we have different method of charging or computing our depreciation. We have straight line method, reducing balance method, some of the year digits, and lots more. So now we have been asked to use straight line method for this question. Now for straight line method, it means that you use a particular amount for the asset over the useful life of the asset. All right, so now what are the assets? The number one is premises, 2%. The amount of the premises, the cost of the premises is 20,000, and now 2% of 20,000 is 400 naira. And the way you treat it is post 400 naira as depreciation of premises on your P or L, then 400 naira you have to take it out from your 20,000 naira on your balance sheet. The second is plant and machinery. The same thing we've done for premises will be done for plant and machinery. That is the percentage of 25,000 naira by the amount of 25,000, which is 6,250. You take it out on your balance sheet, and you post 6,250 on your profit or loss. Now you have to take note of this plant and machinery. Now if you check the additional information, if you check the question so well, you notice that provisions for depreciation already on plant and machinery is 2.5 has been provided. We have 2,500 naira as provision for plant and machinery, and we've been asked to charge 25% of depreciation on plant and machinery again, which is 6,250. So usually what you are supposed to do is, because when we talk about provision for depreciation already, now this provision for depreciation is showing on the credit side of the account. It represents an accumulated depreciation already, and you're asked to charge another set of another depreciation. So what you're supposed to do is add your new depreciation with your accumulated depreciation. Add your provision for depreciation here with your accumulated depreciation with your depreciation for the year to be posted in your P or L. To be posted in your balance sheet. Sorry. So you have to add that to this to be posted in your balance sheet. And the next part, which is motor vehicle, 10% of 23,000, which is 2.3. Now the next part is write off preliminary expenses. That is, when we ask to write off preliminary expenses, don't forget what we are doing is just we are supposed to take it off by posting it in appropriation account. Now, and the last part, which is transfer to general reserve 5,000 and transfer to revenue reserve 5,000. So all of these two transactions are supposed to be posted in our appropriation account. So as soon as we are done, solving all the entries that relates to the additional information, then you're good to go. That is, you're good to prepare open your account. Now, opening our account, the first thing that you have to take note is put the name of the account. Please don't forget the name of the business, Johnson Nigeria Limited, and the title of the account, which is Trading Profit and Loss Account for the year ended 31st December 1990. Whichever year you're giving, your debit side and your credit side has to be there. Then you prepare your T-book. Then the first thing is you bring out your opening stock. Don't forget your opening stock as it was given to you in the question. You add your purchases, then add your carrying word. Then the next thing, as soon as you add your carrying word, you have to take out your return outward of 360. Now you have to take note. If you check the question very well, you notice that you're giving returns one on the debit side and one on the credit side. If you check very well, you notice you're giving two returns, one on the debit and one on the credit side. Just take a look at what I'm talking about. Returns debit and credit. Now, which one relates to return outward and return inward? Don't forget I told you that you have your asset, purchase and expense on the debit side, and on the credit side you have your sales, income and liabilities. Now, and your return inward is coming in, it has to be a debit. Yeah, it has to have the debit balance, and your return outward is going out. You have to have a credit balance. So return outward is on the credit side, while return inward is on the debit side. I think we have something similar to this on the for the purchase and sales too. Let's check purchase and sales. Let's check. Okay, now this is purchase and sales. And for purchase and sales, we have purchase. If I may ask, now which one represent the purchase, which one represent the sales? We have purchase and sales on the debit and credit. So I hope you should be able to determine, because I've given you the key, and the key is APE, asset, purchase and expense on the debit side. So purchase is on the debit side. So purchase value is 45,000, while the sales is 91,740 on the credit side. So also we have discount. We have discount on the debit and credit. So we have, and you agree with me that we have two types of discount: discount allowed and discount received. Discount allowed is an expense, while discount received is an income. And we said that expense is on the debit side, while income is on the credit side. So discount allowed is debit, while discount received is credit. So those are just the key. You have to understand the logic behind all of these transactions, because so that in an examination condition you will not be confused when you're giving discounts, then you're giving items or figures both in the debit and credit side. So don't be confused. It's not a mistake. It's an intention to be able to determine whether you know what you're doing precisely. So you have to take note of all of those things. So don't forget, we have our return outward on the credit side and your return inward on the debit side. So your return outward, which is on the credit side, is 360. So by the time we take out our return outward from our purchase value, we'll get 44,800. Now when you add your 44,800 with 8,000, we'll get 52,800, which is our cost of goods available for sales. Now immediately after you get your cost of goods available for sales, you are taking out your closing stock. And when you take out the closing stock of 12,500, and don't forget, this closing stock is the amount of stock that we have on the additional information, the first item on the additional information. So if you take it out, you have our cost of goods sold. And I told you that at this juncture, as soon as you get to the cost of goods sold, you have to compare the cost of goods sold to your sales value. So let's go to our sales value. Our sales is 91,740. You take out your return inward, then you have your net sales, which is 91,500. Sorry. Now, as soon as we get 91,500, you can easily compare our sales to our cost of goods sold. Now, when we compare our sales to our cost of goods sold, you can easily determine the profit element, which is the gross profit. And in this case, it is obvious that we are making a profit of how much profit? Take out 40,300 from 91,500, you will get a profit of 51,200 naira. All right. So by the time you add up your gross profit from cost of goods sold, you get 91,500. So we are good to go. So this is the end of my trading account. So I can move to the next part, which is my profit and loss account. I'm bringing down my profit of 51,200 to my credit side, gross profit down 51,200. Then I have to compare my expense to my income. Now, what are the expenses that I have during the period? The first, now the expense, I'm picking them based on the additional information that I treated. Additional information B. Don't forget, the first additional information was motor expense, and I added 200 naira to my 1.8 to get my 2,000. So the 2,000 naira that I said I'm posting is what I'm posting here, and you can see what I've done here. I said workings B1. That is, if you go to workings B1, you should be able to see this entry. Now workings B1, I'm saying 1.8 plus 200 is 2,000. So this 2,000 have to be reflected here. Please, you have to take note of that. All of these things are tracked mark under examination condition. There are two ways to it. Is either you work just the way I've done it here and write the final figure here, or you come down here to tell me that 1.8, then you in this bracket, instead of having workings B1, you tell me, you show me 1.8 plus 200, then you give me my 2,000. But you should never give me 2,000 naira here without the instruction of where you have gotten that figure, because of course I'll be confused. I won't know where or how come you get your figure. So you have to show that particular, this instruction. It's more or less like a reference. Alright, so the next one is insurance, which is B2, 450. Don't forget insurance. I don't have any insurance on my TV, so insurance accrued 450. I have to post 450. Rent and rates, that's the next one, 1,280. Then sundry expense, 3,650. Provision for bad debt is 800. Don't forget, after taking out the 2,000 from my 2,800, I have 800, which is my provision for bad debt. Now the next part, which is E, my rental income, additional information E. Additional information E, rental income. I told you that the rental income is 2,400. Though even though I am yet to earn, or I'm yet to get that income. Of course I have earned it, so I have to show that I have earned it. So I'm showing income, and don't forget income is always on the credit side. So credit side 2,400. I'll be adding it to my gross profit. So I'm moving to the next one, which is additional information F, wages and salaries. Even though on my wages and salaries on my trial balance is showing 5,000, I have to recognize 4,800 because that is the amount I'm paying. That is 400 by 12 months. 400 by 12 months is 4,800 naira. So I'm paying this, and the remaining 200 have to go to my prepayment side of my balance sheet. Alright, so the next one is it's bad debt. And don't forget, I said bad debt, as far as I'm concerned, I said bad debts, whenever it is showing in your additional information, it has to be deducted. You have to, and we were told to write it off, bad debt of 600 naira. So 600 naira, then you have to take it out from your debtors, which you have done in our workings. The loan interest is 1,200. 1,200. Don't forget, even though it was 1,000 naira that was given to us, but you were owing 200. So I believe you understand. The next part is depreciation of assets. Now for the first assets, which is premises, is 400. Plant and machinery 6,250. Now please, you have to take note of this plant and machinery. This 6,250 is the amount of depreciation for that year. So by the time you get to your balance sheet, it has to be 6,250 plus the 2,500 that was provisions for depreciation that was made. It's just like I have been depreciated. Take for instance, I have like 2 plant and machinery. I have depreciated one last year, and I'm still using that business. I'm still using that asset in the business. So I now bought another one this year. So the one I depreciated last year, of course the value has reduced. I depreciated it for 2,500. The value has reduced as of last year. This year again, I've still depreciated for 2,500. And I'm now buying additional plant and machinery. So by the time I add up the amount I'm depreciating my new plant and machinery with my old plant and machinery, I have 6,250. So 6,250 is the amount I'm charging for this year. But by the time I get to my balance sheet, what will happen is I will be taking that 6,250 with my 2,500 of last year. That is, those are the entire. That's the entire money for my depreciation. I will take it out from my entire plant and machinery to get the new net book value of my plant and machinery. So I'm moving to the next part, which is motor vehicle. Motor vehicle is 2,300. So the next items. So and those, if you notice that after depreciation, the set of items that was given to me in my additional information, which are preliminary expense, general reserve, and revenue reserve, will be posted in appropriation account. So it does not stop there. That's not the end of my profit or loss. So I have to check my trial balance to look for the items that are supposed to be posted in my profit and loss account. And those are the items. Now these are the items I've noticed. Discount allowed. So discount allowed, you agree with me that is an expense. So it has to be on the expense side. Carriage outward is also an expense. Director salary is an expense. Repairs to premises is an expense. So those are the expenses I have. Now I have income of the discount receipt, which is 400 naira. Now those are the total income I have for the period. Now if you had all your income to be your gross profit, you would get 54,000 naira. Now 54,000. If you consider all the expense, if you add up all of the expense, the amounts you arrive at, if you take it out from your total income, you will notice that you have a difference of 23,260. So this 23,260 is the amount of my net profit. So this is my net profit for the period. Now if you add up all of these together, everything, all the expenses and my net profit, you get 54,000 naira. So that makes this account to be balanced. Please don't forget, what I've done here to get my net profit is I added all my expense together, added all my expense. So by the time I added up my expense, I took it out from my, because my expense is not up to my income. So my expense is not up to my income, so I took it out from my income to get my profit. Let's assume my expense is greater than my income, so definitely that will be a net loss, and the net loss will be on the credit side. But for this case, it's the net profit which is on the debit side. That's why I have my 54,000 at the end of the period. Alright, so that is the end of my profit and loss account. I'm moving to the appropriation account, and on the appropriation account, the first thing you have to start with is the appropriation account. Because there is no more space here, you could also continue your appropriation account just the way you have continued your POL account. So what I can do here is take my net profits here on the credit side to be net profit brought down, then balance brought down, and the likes like that. But because there is no space, let's move to the next page. Appropriation account. See format. The first thing is balance brought forward. If you notice from your trial balance, we were given profit and loss account on the trial balance on the credit side, which is 3,000. So that's the balance brought forward. Then you have to include your net profit brought down, which is 23,260. And now the question is, all these profits, if you add the two together, you get 26,260. All this profit, how are you sharing them? Don't forget, the first thing you have to do is, they said you have to write off preliminary expense of 12,000 naira. You have to put that one. That's additional information. J. The next thing is, they said transfer 5,000 naira to general reserve, 5,000 naira. They said transfer another 5,000 naira to revenue reserve. And if you notice from the question, you have your revenue reserve of 8,000 naira from the question already. If you check the question very well, they said revenue reserve 8,000 naira. So if you added that 8,000 naira to your 5,000 naira, okay, so revenue reserve is your 5,000 naira, so you have to transfer this 5,000 naira here. So the 8,000 naira with your 5,000 naira from your revenue reserve have to be posted in your balance sheet. All right. So for now, so these are the expenses that you have taken out from your okay, the 8,000 naira relates to the general reserve. Actually, sorry, 8,000 naira relates to the general reserve. All right. So for this expense that you have taken out from your profits, so if you add up all of these expenses, this is 12 plus 5 plus 5, so this is 22. Take out 22 from your 26,260, you get a difference of 4,260. So you still have a profit that you can retain in the business to be 4,260. So if you add up all of these, you get your 26,260. All right, so that's the end of our appropriation account. It's as simple as that. End of our appropriation account. We move to the next part, which is the last part of today, and that is our balance sheet. And don't forget our balance sheet, we have asset is equals to capital plus liability. So balance sheet, the first thing is your title, and then you have your T format, you have your assets. So don't forget, what you're doing on your balance sheet, you're showing that assets, which is fixed asset plus current assets, will be equals to capital plus liability. Now what are the set of assets, what are the liabilities and like that you have in the business? Now for the assets, you said the cost of the premises is 20,000 naira. You take out your depreciation of 400 from premises, you get 19,600. The next is motor vehicle of 23. You take out 22,300 from 223, you get 20,700. Now this is cost, this is depreciation, this is net book value. Cost is the amount you are buying, and we are following the rule, we are following the accounting rule of historical cost. Accounting concept and conventions talked about historical cost, and it said that assets should be recognized at the cost of the asset. So that is what we have followed in this section, to be showing the cost. And we are taking out the depreciation, that is the reduction. You will agree with me that the amount you bought your phone, or your dad's phone or your mom's phone, the amount they bought the phone as at last year, years back, would not be the same amount they can sell it now, because some set of things have happened to the phone, because the value of the phone has reduced from the amount they bought it as when they bought it to what it is today. And the reason behind the reduction in the fall in the assets might be due to usage, due to wear and tear, due to and the likes like that. So because of that, accounting used to make provision for depreciation amount. That is, they are trying to estimate the amount of the asset is losing for that period in time. So we are saying that the premises has lose some value of 400 naira. So now, if I bought asset of 200 naira, 20,000, and it has lose value of 400, So the value of that asset will now be 19,600. That's what we are saying. So the value is now net book value. So that is the book value now is 19,600. So for motor vehicle, the same thing now. For the next one, which is plant and machinery, don't forget 6,250, which are posted in my P&L. Then with the 25, which is on my trial balance, will give me the net of 16,250. Now those are the assets I have in my business. These are the current, the fixed assets. Sorry, the fixed assets I have in my business. And usually, because of the changes that has happened in accounting, they don't really call it fixed assets again. They rather call it non-current assets. You have to take note of that. So non-current assets. So by the time I sum up all of this together, I get 68.5. Summed up all of this 11.5. I'm closing these two accounts. So what I'm using now is my net book value. So my net book value is 56,550. So let's move. Now for the current asset, now I have to be taking note of all of these things based. I'm using the order of my additional information, and the first item on my additional information is my stock. Don't forget, and the stock is closing stock. I told you earlier that there are two ways to it. You have to post it twice. First of all, show it in my P&L, which I have done. I have recognized it in my trading account, that is taking out less closing stock. Don't forget what we did. And the second part is current asset, which is 12,500. Please take note. The second, the next set of items are the second item on my additional information is motor expense owing. And I said owing is an, when you are owing someone, is a liability, so it's current liability. So owing, you hold motor expense of 200. Don't forget, we added this 200 to 18 to give us 2,000. So we put 2,000 to our P&L. So the part that you have not paid is what you are showing here. Insurance owing 450. Don't forget, sundry expense owing 400. So that's additional information B. Now for additional information C, we said prepaid rate is prepaid. Now when you prepay something, it's an asset. Don't forget, when you have prepaid expense, it's an asset, 320. So for the next part, we have prepaid sundry expense of 250. Don't forget. Then we have the next part, which is debtor. Don't forget, the next part was provision for bad debts. So on provision for bad debts, we still use the amount on the debtors part, which is workings G. And for the debtor, after we have taken out our bad debt from our debtor, we have taken out the new provision for bad debt, which is 28 from our debtor. We arrive at 8,990. You could still go back to check the additional information. Then the next thing is rent receivable. Now for the rent receivable, don't forget I said we have not received that rent. We have not received that rent. So it's more like accrued income. Accrued is an income. They said we sublet a part of our building for 2,400. And the question you should ask me is, how do I know that I have not received the rent? One of the ways to determine that is, it is not on my trial balance, and they are giving me as an additional information that I've listed. Of course, for the fact that I've listed, or for the fact that I've sublet the apartment, I should be experiencing an income. So it is a current asset of 2,400. So the next part is salaries and wages prepayment. The amount I paid was 5,000, and the amount I'm supposed to pay is 4,800. So definitely I have a prepayment of 200. So the next part, which is my loan. Now with all of this, I've been able to capture all the additional information that was given to me. So I'm moving to the next item now. The next item is, what are those other things that are in my something. Okay, I have loans, I have loan interest. Loan interest, I have loan of 24,000. Loan is a long-term liability, and the interest I'm paying is 200. Or okay, I'm supposed to pay 1,200 because it's 5% on 24,000. It's supposed to be 1,200, and I've paid 1,000. So the part I'm winning is 200 naira. So I'm moving to the next part. I have cash in hand. If you check your trial balance, you will notice that immediately after I treated all the accounts on the additional information, the reason why I'm using this approach is that I don't want to miss out any particular entry. And because if you miss out any entry whatsoever, you would notice that your balance sheet will not be balanced, and really that could actually cost you a lot of mark, because if your balance sheet is not balanced. So what I'm doing is I have picked all of those items that relates to my additional information one after the other. So as soon as I finish all of those entries, then I can now go back to my trial balance and check out for those items that I have not treated at all. Then I will now post them. So I have my cash in hand of 3,000. I have cash at bank of 4,000. So those are all of the items I have on my assets leg. So if you add up all my assets, I have the amount. I have everything to the tune of 85,510 naira. So I'm good with my assets. And the rule is, asset is equal to capital plus liability. So whatever my capital and liability is, it has to give me this amount of money. So if it's not giving me this amount, that means something is wrong somewhere. So the first thing is ordinary share of 20,000. So we have authorized capital of 20,000 naira, and don't forget the authorized share capital, as I've explained, is the amount in my memorandum of association. I am not selling the authorized share. Authorized share is just the amount on paper. I cannot say beyond that. It's as simple as that. So 20,000, and I have my issued share. Now the issued share is the part I have now sold. Now the part I have sold is still 20,000. You get, so it is not 20,000 naira. It is this 20,000 naira that is actually my capital. This one is just the amount on paper. You get, just show them. You are supposed to be showing this in an examination condition. So for this issued share is my real capital figure. So what are those things that will affect my capital? My profits, my reserves, and the likes like that. And don't forget, I've distributed my profit according to my appropriation account. So my share premium is my 10,000 naira. My general reserve, I have 8,000 naira plus 5,000 according to what I have in my appropriation account. So it's now 13,000. I have revenue reserve 5,000. Now if I add up with my retained profit, which is 4,260, the remaining profit, if I add up all of these two together, I will get 32,260. Now 32,260 plus 20,000 will give me 52,260. Now if I'm summing that with the amount of the loan, which is 24,000, and lastly I have my creditors. So creditors of 8,000. If I sum up all of these, I'll get 9,250. So when I add up 9,250 with 24,000 with 52,260, I'll have my 85,510. Alright, so as you can see, my balance sheet is balanced, which happens. So I'm happy because my asset is cost to capital plus liability. So that brings us to the end of the class for today. So I'm sure it's a long day, so you have to take your time, go through this over and over and over and over again. If you have any question, you can always chat us up on the WhatsApp group. You can always send your questions, and I have some questions that have been prepared for us, so I'll be sharing with you on the WhatsApp group. Ensure you attend the questions and forward your solutions to us as soon as possible. Thank you. If you have any question, please don't hesitate to get us. Thank you.